This is the seasonal stock and ETF report for today, September 20, 2022. 2 days left to the summer. Okay, let's go and start from Dow 30. Now, look at the top entries of Dow 30. Walmart, United Healthcare, Visa, Microsoft, and then Triple M. The top four with the best Sharpe ratios are really long term. If you click on them, the shortest one of the top four, 221 days, is until end of April. Why is this? The reason for it is right here. Take a look. Right there. There's a down here before it goes up. You go to the next one, Visa, it goes sideways here before it goes up. And these are generated for the last 10 years, which was really bullish years generally. United Healthcare is a slope up, but not steeply. It's pretty sideways to up. And Walmart is a big down before it goes up. Well, this down is the problem. Let's look at indices common and just look at a 10-year S&P 500 seasonal chart. Look at what happens to S&P 500 in the last 10 years. S&P 500 generally goes down this time of the year. Look at this. 2020 was an exception year, and 2021 was literally a flat year, but the years that it drops sharply. What if we look at the last 20 years? There it is. Last 20 years, it's also a down. Pretty big down. It starts a little bit earlier on a 20-year seasonal chart, but it's generally down. For this drop last 20 years, S&P 500, even the seasonal viewer is tagging it as a short. This is a period of September 17th to November 8th is generally down. We are in a down market right now until this second week or so of, maybe even later, of October. So we consider this the times to look at downs. So going back and taking a look, we click direction twice and we see we have four fairly short-term shorts, basically. The first one, 3M, 9 days, drops a little over 1% in 9 days in average. However, if you take a look, what's the biggest one? 2014, it dropped 2.42%. Last year, it dropped only 0.27%. But look at IBM. I talk a lot about IBM. This thing is just incredible. It is so consistent on this drop. I haven't seen too many consistent stocks like this. Let's look at the last 15 years. It's pretty much the same, especially if we go here. Look at that. There. 14 out of 15 years, this thing dropped. This time of the year. It may be a few days too early for the best time to short IBM, but IBM is a top contender in my book for a short right now. Look at that, 1.3 Sharp ratio of 1.3 on a, let's see how many days this is, a 12-day trade over the last 15 years. This is an amazing probability for a 7% drop in IPM. That's a good one. Verizon drops 1.34% in just a matter of a few days. Maybe is it any better if it's here? We can take a look. No. It's probably a little bit better here where we are at. I look at Sharp ratio. That's how I evaluate timing. And then there's Disney. Disney looks pretty down. So if you had taken the 2018, which is the outlier years, all the other years, they're pretty decent drops. Disney may also be a contender. Let's go and take a look at NASDAQ. So we've established we're looking for shorts. So top of the list with a Sharp ratio of 1.05 is Lead. This is a $65 stock. I'm looking right here, last price. Monster Beverage, also a very good down. Sharp ratio over 1. It's just a handful of days, like 12-day trade. And then there's Biogen. Biogen, look at that drop. It's pretty sharp. 5.83% in 31 days. Dexcom on a downward spiral. Align also on a downward opportunity. Vertex, it's a good short, 26 days. ATVI. Look at these great shorts. These are great possibilities. Take out 2020, that was an outlier year. A COVID recovery period. So the seasonality was not as strong as the fundamentals at the time. S&P 500, we're looking at shorts. We have Gartner at the top of this list, drops 1.82% in 20 days. $300 stock. That's a big drop for a $300 stock. Donner, Baxter. Look at these drops. This is the time. This is not a time to jump into stocks. This is a time for shorting or staying out of the market, at least until our magical day, which there's going to be a video about it, and we'll talk about it here. The magical, most bullish time in S&P 500 in the last 80 years is from, I believe it was, I'll talk about it later on, but I think it's October 25th until January 6th. It's at 84% of the years it was profitable. Last 8 years. Here they are. There is just so many good ones right here. But look at these drops. These are the times to short everything. Russell. Mattel on the top of the list. Nobody's buying their kids toys this time of the year? I guess not. Not now. Drops over 2.5% with a Sharp ratio of over 2. It's a $23 stock. Coles. Nobody shops. $28 stock. Royal Gold Inc. $93. JetBlue is on the list. It's only an $8 stock, but I like JetBlue. I want them to go up, but apparently not this time of the year. This is the time to buy JetBlue. Check this out. Of course, it's going to be on our list of opportunity when this time comes, but look at this jump. JetBlue really takes off. Average profits 20%. Back to shorts. All right. Let's take a look at ETFs. Well, top of the list is a short anyways. It's the Junior Gold Miners ETF. This is not a time to be long on gold. What happens if we started here? Look at 2022. It didn't make it. It started going up. Yeah, this might not be, it might be because of inflation. The golds aren't working. Gold shorts. Silver. Silver is also should be on a down, but then silver is taking off too. Yeah, this is recent. Yeah, the things that are inflation, directly related to inflation, are not working seasonally. However, whenever something doesn't work with seasonality at the time, it's going to work later. It may be that other external forces that are overwhelming it, but seasonality never goes away. It's always there, but the other external factors may overpower it for 1 year. All right, that's it for today.